As Russia's sanctions raise concerns about the global repercussions of effectively shutting Russia out of international finance, U.S. banks assess their exposure to Russia, according to Gerard Cassidy, the managing director of RBC Capital Markets. A collapse of the Russian economy should be less likely because of the country's small size and lack of trade links with the U.S. Cassidy also added that the risk is minor. Let's dig a little more into this subject. Please subscribe to our channel to not miss any of our future videos. U.S. banks are safe from Russia-Ukraine war. Expert says impact is manageable. With Russia's banks and central bank no longer part of the global banking system, some are concerned about the repercussions of a G20 country's economic collapse. Due to the sanctions, the Russian ruble has fallen by more than 25% versus the dollar. Bloomberg reported on Monday that Citigroup's exposure to Russian debt and other assets was $10 billion. More than $2 trillion in assets are held by the corporation. Russian and Ukrainian geopolitical and economic events are being closely monitored by Citibank, which says it plans to handle any exposures or risk it may face. JP Morgan Chase and Bank of America did not name Russia as a top 20 overseas market in terms of exposure in their annual disclosures for the first time. There were no mentions of Russia in the annual report from Wells Fargo, which is more focused on domestic operations than the other three mega banks. As part of the recent discussion of financial stability, Russia has indirect concerns. The Lehman moment was deemed unlikely by Western countries who slapped Russia with a slew of sanctions over the weekend. The United States has stated that it will prohibit transactions with Russia's central bank, preventing the Kremlin from defending its currency, mainly isolated from the SWIFT global financial network. The Central Bank of Russia had to boost interest rates by a factor of 2 due to the falling ruble from 9.5% to 20%. In front of Russian banks, queues are forming, heightening concerns about a possible run on U.S.-sanctioned banking behemoths such as Sberbank and VTB. The former head of the International Monetary Fund, Kenneth R. Rogoff, believes that a collapse in Russia will not lead to a financial crisis in the U.S. Russia and Ukraine both have minor roles in the global economy, according to Rogoff, who spoke to Yahoo Finance on Monday. According to the World Bank, Russia is the world's 11th largest economy. As a result, some fear that a worldwide financial catastrophe akin to the caused by the fall of Lehman Brothers could occur. Sberbank and VTB have combined assets and international operations in Central and Eastern Europe of around $750 billion. Credit Suisse's Sultan Pozar warned over the weekend that enterprises worldwide may face considerable settlement risk as Russia and its banks continue to struggle to secure U.S. funds. For example, the exclusion of banks from SWIFT is like the failure of Lehman Brothers clearing bank to transfer payments on its behalf, which resulted in the bank's inability to make payments. As Pozar stated, history does not repeat itself, but it rhymes. The United States financial institutions are well positioned to withstand any global economic turmoil. According to Cassidy, global financial situations are much healthier than they were pre-Lehman. Yahoo Finance reported on Monday, "We now have more than twice as much capital liquidity in our banking system in the United States as we did before the financial crisis." According to experts acquainted with the U.S. banking industry, despite the Biden administration's recent warnings that such moves are likely, U.S. financial institutions are well prepared to deal with a new round of Russia-related sanctions in response to Ukraine's invasion. As the battle escalates, new challenges for U.S. banks will surface, including how they manage correspondent financial relationships and the potential of Russian cyber attacks. According to several sources acquainted with the banking business in the United States, retaliatory hacking remains a significant issue in the light of the sanctions, even though multiple large financial institutions have declined to comment publicly on their plans. According to one of the persons, several U.S. agencies have been informed that intelligence will be exchanged to plan a swift response, but the authorities have not specified that response. While due diligence and know your customer onboarding processes are required for banks doing business with foreign financial institutions to comply with U.S. sanctions legislations, correspondent arrangements are frequently complicated and may include numerous layers of consumers. He said this may become more difficult if the conflict spreads beyond Russia and Ukraine. According to Alex Surdin, a former U.S. Treasury official during the Obama and Trump administrations, Russian institutions may risk retaliatory cyber attacks to Western sanctions. Hey, take a breather there for a moment. If you have not yet subscribed to our channel, please click the subscribe button to ensure that you don't miss any of our videos. The safety of banks is in jeopardy. A default on Russian debt might spark a liquidity crisis like the one in 2008, when banks fear the viability of other banks and stop lending to one another, causing a global financial collapse. Banks in Europe, particularly those in Austria, France, and Italy, are particularly exposed to Russia's latest sanctions. The Bank for International Settlements reports that French, Italian, and Austrian banks hold approximately $25 billion in outstanding claims on Russian debt. Since the Crimea sanctions were imposed in 2014, U.S. banks have reduced their Russian economy exposure, although Citigroup has $2.3 trillion in assets. The bank's $10 billion in direction is still a fraction of that total. Defaulting on Ukraine's debts is also a possibility. Additionally, Ukraine's $60 billion in bond debt was lowered to junk status, increasing the likelihood of the country's financial collapse. Due to their service in Ukraine or Russia, several institutions will be affected in addition to debt exposure. The rating agency Fitch has ranked BNP Paribas and Crédit Agricole as having the highest risk of exposure to Ukraine because of their activities in the country. Société Générale and UniCredit, two of the largest European banks operating in Russia, both have significant exposure to Russian debt. The cost of raising US dollars in the euro swaps market has increased, which is bad news for European financial institutions. Higher interest rates put further pressure on banks' profit margins because they create the dollars required for most foreign trade. As a result, how substantial are the banking system's default risks to the overall economy? US-based financial analyst firm Morningstar thinks European banks' exposure to Russia is insignificant in financial stability, but it has been anticipated that up to $150 billion might be lost by European, American, and Japanese institutions. There's a good chance that other facets of banking will be impacted as well, as far as Russian millionaires are concerned. Switzerland, Cyprus, and the United Kingdom have emerged as the most favored destinations. Russian billionaires flock to Cyprus because of its golden passports. Financial institutions in these nations are likely to decrease activity due to the sanctions. Since the invasion began, the value of Lloyds and NatWest, for example, has both dropped by almost 10%. Subscribe and hit that notification bell to watch more from the latest worldwide. Tell us what you think about this video by leaving a comment below. We are Dinero Association, your partner in building wealth.